Welcome to Life Planning 101, brought to you by Smart Money Group and Kennedy Financial Services in Eastland, Texas. Tune in every week as we share important information to help you and your family live life on purpose. Insurance, investments, legacy and tax planning, and much more. All covered now on Life Planning 101.
Hey everybody, how we doing this afternoon? This is Henry Knowles. I'm here with Brent Bible, Sam Barker, and Aaron Kennedy for another edition of Market Minute. Aaron, what's going on?
Wow. Nothing. I'm just sitting here on the beautiful beaches of in the Bahamas, just enjoying. I was calling in to see what was going on. How's everybody down there? No, just teasing. Wow, guys, what a week. What a week. And we're fixing to dive into it. Honestly, it's a lot of excitement. It's not the kind of excitement that you feel good about unless you're looking at it a certain way, and I want to help people look at it the right way. So let's start off interest rates. This is a huge story. This is a huge story right now, and what's going on. So Brent, help us out.
So yeah, the 2 to 10 has all fallen below 4%. So we dropped all the way into the 3% range. Curve's normal. So if you're looking to get anything at 4% or more, you got to get below a year. So big change.
Wow. I think I was looking at it today, and rates were dropping, I think somewhere around 1.5%. Not notional. I mean, it didn't go from 5.5 down to 4, but rates did drop as a percentage, 1.5%, which is massive. Very, very big. And that's part of the story. Couple things right off the bat. If you don't know what's going on the last couple of days, you're living under a rock, and more than likely you're not listening to us. But Trump came out with his tariff system, and it looks like there's going to be a minimum of 10% tariffs on countries, and we're going to push ours up to about 50% for the most part of what countries are tariffing the American people. The funny thing is we'd never even worried, and it didn't bother us one bit that these countries were doing it, and as soon as we turn around and start doing it, the whole world falls apart. That just seems strange. Number one, why I'm saying number one, this is hugely political. Most of the things that's going on is political because, at the end of the day, the president is trying to change our entire tax system to relieve the burden off of us and put it on the current countries that are selling things to us. Our country is 70% of the growth of our country on a year-to-year basis is the consumer. It's just me and you. He's trying to offload the cash needs of the government on to those people selling us goods. And at the end of the day, that should relieve the citizens of the U.S. of their tax burden. That sounds like a fantastic idea. And when you think about it, who has all the bargaining power? Man, you got your computer out there. Tell me, how many trillions of dollars is the U.S. GDP? We'll give him a second to look that up. But it's such a huge amount that we're buying from other countries. And at the end of the day, we don't need those other countries. Well, we need those other countries for cheap goods. But those countries that are selling to us need us a heck of a lot more than we need them. So who's going to win this game in the long run?
It's the customers, the clients.
It's the American people.
The consumers.
Yes.
We consume more than anybody else in the world. The American GDP is $23.5 trillion, and it increases in quarter four 2024 increased at an annual rate of 2.4%. So if you're a business, who has leverage over you? It's the clients. It's the client base.
Day in and day out. And I don't want everybody to think that 100% of that is overseas. But let's just play a game, and pretend that is all overseas. That's what, $16 trillion we're handing over to other countries on a year-to-year basis. And they want to try to bully us? No. It's not going to work that way. At the end of the day, pinching us, and they've been pinching us for a long time and saying, hey, I'll sell you all the goods that you ever need, but if you try to sell anything to me, hey, I'm going to slap 100% on you, 80% on you, so it makes our goods more competitive. It shouldn't sit right for any of us, but that doesn't matter. The market is reacting to it, and it's reacting very, very strongly. But at the end of the day, the strongest are going to prevail, and that is us. This seems like a big political nightmare, and it is. And at the end of the day, the strongest is going to win. I can't say that enough. So we got that going on. Another big thing that happened today is Powell came out and said he is not lowering interest rates. Why? Go look around the world and tell me a country that is not struggling right now. I think Europe is in a full-blown recession. Most countries are not going gangbusters right now. So we all live in a global world. I mean, we're sitting here talking with tariffs, and having a tax on things that we're buying is changing the entire growth of the world. So try to tell me one doesn't affect the other. This is hugely correlated. But at the end of the day, U.S. dollar, I mean, as of right this second, is weakening compared to other countries that are in a full-blown recession. Statistically, we're not in a recession right now, but we are the strongest of the world. And we're telling people that, hey, we're going to leave behind the rest of the world. We're going to keep our interest rates as high as possible while everything else is faltering. So now we're going to back up to what Brent was telling us. How much are interest rates down? The market is telling us no. The market is moving interest rates at a very, very rapid pace. We got to get super short before we can even get 4%. Anything longer than that is
just a touch over.
39. So who's right? Who's right? Market's dictating one thing, and Powell's saying we're not going to do this. Something's got to break there, because eventually the U.S. dollar is going to get so strong that we're not going to be able to sell anything to any other country, period. And tell me, if our dollar is strengthening, what does those tariffs do to us? If our dollar strengthens by 10%, and then the tariff is 10%, what did it cost us? No, not a penny. What did we feel? Not a penny. You know, it's nothing. It's a big nothing burger.
And it's because it's all coming overseas.
Yeah. So, I mean, you can't have your cake and eat it too. We're going to be a global country, and we're worried about this currency fluctuation. We're worried about interest rates. We're worried about tariffs. We all got to play together, and that's not happening right now. So.
You talk about whoever's the strongest is going to win out, and the only thing I can think of is who's more headstrong, Trump or Powell. And so I think that's a battle that we see politically in the country. And then you also see the battle you were talking about earlier, which country is strongest,
Right.
the U.S. or whoever they're trading.
Think about this on Powell. If Powell's saying, I'm keeping interest rates at this price, but the market dictates a different one, are you going to buy new issue, or are you going to buy what the market's dictating? So he's keeping something different than what the market is. And whether interest rates are going up or down, we know if interest rates are up, bonds are down, and vice versa. But, I mean, think of it kind of like this. Your retailer says your house is worth $1 million, and every other house in your neighborhood is worth $200,000. No matter how long you say your house is worth $1 million, it's got to come down before you can sell it. And that's what we're running into. And that, it does not make any sense. We've got to get down to expectations, or we're not going to be competitive. Our dollar's going to get so strong, we're not going to be able to sell anything in this global world.
You've been saying for a couple of years that stuff hasn't been making sense. Whenever we were in 2022 prices, the The stock market was still extremely expensive whenever we came off the bottom of 2022. Value didn't bounce in 2023 like we anticipated. Whenever 2023, if interest rate news was good, the market didn't like it, and vice versa. Good news was bad news. And now, if you look at today, and just today, low vol by itself was down more than the market at one point today. Make that make sense.
That's great. That was a kind of an exciting part of the day. I think things that had been acting rationally, even though the market's been down, it was doing what it was supposed to. If you were taking the lowest risk in the market, like buying the low vol stuff, just think of utilities. I don't care what GDP does. I still want to turn on my heater when it's 20 below. I still have to turn on my lights so my kids can do their homework. Those are some lower risk areas to invest in. So if the market's going haywire, you would expect those lower risk areas to do better. And it's been doing that. So think things have worked like we've thought. Up until, what time was it? 2 o'clock? 2:11? we were kind of paying attention to it. All of a sudden, low vol dumped. And we're talking the safest, most regulation's going to get me there. The securities that don't react to the market as much as others, those took a huge drawdown, greater than the market for just a little bit. And that is nothing but, capitulation of the market. We are finally seeing people say, no more, sell all. Going and hitting the sell button, and it doesn't matter what's in your portfolio. It doesn't matter if it's great companies, if it's bad companies. It's high risk, low risk, real estate, gold, Bitcoin, cash, whatever. It's sell it all. And then that's what we saw at about 2:11 today. And I'm pretty sure we were not the only ones to notice it, because almost immediately, as soon as that happened, the market had a 1% bounce, or gave back almost 20% of the loss today. I mean, within seconds. So that part was very, very, let's say, interesting. Our whole strategy is be able to hold less risky stuff, to have it as ammunition when the market really tanks. And one of the things we look at is we look at momentum models and see what people are buying. This is usually the first step, is everybody hits sell all. And then the market starts to look out and say, how can I make money? Well, I can make money in utilities. So people start buying low risk stuff. I know if my kid breaks his arm, I'm still going to take him to the doctor. So maybe some health care. Some of these lower risk stuff happens. But the first thing that has to happen is people have to give up. And that's kind of what it felt like this afternoon. But it's crazy. We started getting phone calls, and we were looking at some of the accounts, and we were down less than 5% on the year, about 3 or so, 3.5. How much of this is emotional versus what is really going on? How much of this is political versus what's really going on? If we had an earnings season that's like, oh my God, this is horrible. I mean, why is anybody buying companies? Has that happened? Hey, Mr. Market.
Not in a while. I would say this is a pretty emotional sell-off since Wednesday. I mean, the VIX is what was it, 40, 45 it hit today?
Wow.
I mean, historically, what do they say? VIX over 30, good time to buy. Over 40, great time to buy. And then VIX 50 or over, just buy it all.
Buy it all, yeah. That's kind of how we've been looking at it. I've been tickled to death. I'm not tickled to death that everybody's account's down. But I am excited about these companies that we can get at these fantastic prices. Now, it's hard to be excited if you're looking at your account and you're seeing it drop quite a bit. when we have the fear of, hey, I need this money for the rest of the life. What happens if it goes, I lose everything? So that part is emotional, and I get it, but what happens if everything goes to zero?
Probably have bigger problems.
We have bigger problems.
I'm glad I had that treasure stored in my backyard. That's what.
Yeah. We need treasure. I love that, treasure.
Shotgun shells.
We need grapes.
Clean
we need
water.
ammo.
Camouflage.
Yeah. How do we drink out of the lake or a river without getting sick?
I got to keep Aaron away from all of my food.
That's exactly right. And I know we're being silly, but if you think about what actually takes place if things go to zero, we're not worried about your stocks and your bonds anymore. Nobody is.
That's called Red Dawn.
Red Dawn. That's it. That's exactly right. I'm really happy you know what that is.
Yeah, they came out with that just a couple years ago.
But, we go through these periods of pricing changes. And one thing I try to keep my head on straight about is prices decreasing because of reality? Or is earnings going down? Or revenues going down? Do people not have as much money to spend? Are companies going down in value because of a reason, or are they going down because volatility has picked up in the market? If we're just in a bad mood and things are dropping, that's opportunity. Day in and day out, it's opportunity. Because we all want what's better tomorrow. We want what's better for our kids in the future. We're still going to get the newest iPhone 3 years from now. AI isn't going away. We're eating pizza right now. We're not moving to hardtack. Or is that what it was called back in the Civil War days? Just
tack.
Yeah.
I think tack's right.
We're not moving to that. We're still going to be doing the same things that we're doing, and companies are going to be bigger than they are now. So a lot of the times when we see things that are happening like it's doing right now, it's the opportunity. Like Henry was saying, volatility picks up to 30, 40, 50. You better be buying. You better not be selling into this mess. It's a good time.
Yeah, and I'd say this is the this recent sell-off, at least this week. I mean, S&P down almost 8% on the week, NASDAQ down 8.5%. Just the entire world market is down. Even gold's down this past week. Would you say this might be the perfect storm of capitulation when it comes to the tariff uncertainty, and now we have increased recession odds and possible recession uncertainty coming up? I mean, we know the market's always forward-looking. It's a leading indicator there. Learned that from studying for my exam. But yeah, what do you think?
Yeah. It's funny. I'm glad you brought that up. Employment just came out, and it was twice what it should have been. So more people are getting jobs. If y'all have been listening for a while, I do not believe the numbers anymore. And just because somebody new's in office doesn't mean all of a sudden they're honest numbers. But employment did pick up. And manufacturing did pick up. Manufacturing employment did pick up. So we're seeing these areas of the economy that usually are more cyclical, meaning that they do better in good economic times and worse in poor economic times. We're seeing movement to the positive. And I still believe 2022 was a recession, 2023 was a recession, 2024 was in a recession, and I think we're at the other end and we'll be coming out of these problems that we've been in right now rather than going back in. And it's hard to say how, because and a lot of it is feelings. Who felt good going to the grocery store, who saw all the help wanted signs. I mean, any kind of government reports that we used to be able to rely on that we knew they were not true. And why were they hiding it? Why were they changing numbers if, it was on it? I mean, Politics. Yeah, so why have to change the numbers? And it's I think it's going to come back in the future when they finally restate everything and say, yes, we were in a downturn. And I don't know when we come back out. It's 25 or 26, but I think we're a lot closer to coming out of a recession than going back in. And I sure hope it's not the perfect storm going in.
I would say the next step would be increased layoffs.
No.
That'd be the next thing to look out for next month or two.
Yeah, and that's, if we are going into a recession, we need unemployment to spike a lot. You know, I know when things are bad, I've seen it in the double digits, and sitting at 4, a little bit north of 4, that's pretty sweet and tasty. That used to be what the country strived for up until about 3 to 4 years ago, when 3 was normal. I mean, 3%, that's a very, everybody's got a job or two. So let's hope we don't see that. But I really think things are picking up and coming up to the other side.
I've got just a couple things before we end here. I'm going to read a blurb from the Financial Post really quick. From 2003 to 2022, a $10,000 investment in the S&P grew to $64,844 if fully invested. Missing just the best 10 days halved the portfolio value to $29,708.
Gosh.
So make sure you stay invested. Missing the best 30 days reduced it further to $11,702. Missing the best 60 days resulted in just $4,205. Whenever you're making decisions in investing, there's always somebody on the other side of that trade, on the other side of that decision, making the opposite decision. What is causing you to make those decisions, and what is driving the trader on the other end to make their decisions? You know, one thing that Charlie Munger really enjoyed saying whenever asked a question is, we didn't make our money by being geniuses or being smarter than anybody else around. We just made sure we didn't make stupid mistakes. If you're not stupid, then you'll do just fine. So, does anybody else have anything they want to end off on?
Yeah, Sam's not calling anybody stupid.
No.
That was a Charlie Munger quote, but he's very right. These times, I do want to own this. These times do happen. And actually, in the last 5 years, we've had a lot of them. 22, NASDAQ was down over 30%. COVID, we had the fastest, most severe drop in history. So if you've been invested since 2020, I mean, you're a veteran in this. This isn't the first time, and this is not even near as severe as any of the other times. I think it's important to try to find the silver lining in everything that you're doing. The most wonderful things you can be doing right now is converting your IRA to a Roth. So don't think about it as the market's down 10%. Say, hey, I just got a 10% discount on what I'm paying the IRS. I'm not a big fan of staying 100% invested all the time. And the only reason is, even personally, I'm super aggressive with how I like to invest my money, but I have money on the sidelines for times like now, because I know if I can keep my head straight and I can find the things I can take advantage of, me holding a little bit of cash on the sidelines will actually be more profitable for me than having everything invested and not having any money to buy these great opportunities as they show up.
Yeah, Berkshire has record cash holdings right now, or at least they did at the last.
Yeah,
there's no telling what they're spending.
$300 billion.
Yeah,
or north of that.
and people were laughing.
Smart like Buffett?
Yes, that's what I'm going for.
Yeah, thanks, Sam.
Yeah, I did want to just kind of piggyback off what Sam just said there about the best
About
best
me
10
being smart?
days. About the best, what was it, the best 10 days, best 30 days over the past, what'd you say, 20, 25 years. Those days typically come after the big down days, like what we've had recently. Not saying that that's going to keep happening. I'm just saying, just look at the chart, look at the days, the big down days compared to the big up days, and they're very close in proximity to each other.
That's a very good point. That's the dead cat bounce, and those feel good. Very surprised we didn't have one today. Very, very surprised. But It's coming.
Which means we're due.
Yep,
We're
we
due.
are due. And I
Yes.
want to remind everybody that Brent is still here as well,
Yes.
looking at all of us with sleepy eyes. So,
He's not asleep yet. We can't hear him snoring, but he is still here.
all right. Well, that'll get us taken care of for another episode of Black and White Market Minute on Life Planning 101.
Thank you for joining us for Life Planning 101, brought to you by Smart Money Group and Kennedy Financial Services. If you have questions, you can email them to lifeplanning@kennedy-financial.com. Be sure to tune in next week for more Life Planning 101. The opinions expressed herein are those of the firm and are subject to change without notice. The opinions referenced are as of the date of publication and are subject to change due to changes in the market or economic conditions and may not necessarily come to pass. Any opinions, projections, or forward-looking statements expressed herein are solely those of the author, may differ from the views or opinions expressed by other areas of the firm, and are only for general informational purposes as of the date indicated. Securities offered through Calton & Associates Incorporated, a registered investment advisor, member FINRA SIPC. Investment advisory services offered through Smart Money Group LLC. Kennedy Financial Services and Smart Money Group LLC are separate entities and are not owned or controlled by Calton & Associates Incorporated.